Welcome back to Best Prep for You. Today we're looking at the Dow Jones US 30, which is outperforming the broader US equity market on Tuesday, which is of course a rare divergence. The Nasdaq and semiconductor names are actually under heavy pressure as investors question whether hyperscalers can continue spending at the same pace on AI infrastructure. The pressure is specifically concentrated in AI hardware and memory names, actually, not the entire equity market. But the Dow is being supported by the more defensive and value-oriented sides of the market, like Coca-Cola, Home Depot, Visa, and major banks are helping the index move higher, while we also have, of course, low energy prices and signals that the US officials remain open to diplomacy with Iran, which has improved sentiment outside of technology. This rotation, of course, comes out just before Microsoft and Meta report their earnings, as well as, let's not forget, tomorrow's FOMC decision. So is it going to be sustained or not? We don't know. But on the technicals, starting with the daily, what we're going to see is that a little bit further up, we have a very important level to consider at 53,500, let's say, just slightly above the previous record peak. This is a 61.8 Fibonacci retracement, and we shall consider it one way or another. One way or another, meaning what? Well, we do have the upper Bollinger Bands at 53,000, just actually above it, and we have a lower band at 5160 or so, and the previous low at 51,500 or so. So these levels are the price action with the Bollinger Band are very close to one another in both upper and Bollinger Bands, and we do have this extension, of course, to 53,500. So if the index extends through the old high, we could see a move, obviously towards 5350. Then it would be the 54K. But that is not just a level to chase blindly, okay? This region also combines the 61.8 and the 100 Fibonacci of the shorter term move to the upside with pullback. The 100, this is exactly the same level. This is a cluster, and it becomes more important level. It makes actually potential exhaustion or reversal area, especially if we take into consideration that a price move above the previous high is not going to get the RSI to actually extend above the 70 level, which is likely to create a hidden divergence between the RSI and prices. Okay, so in that scenario, the Dow could briefly break above 53,000, what is it, 350, 60, let's say the previous record high, fail to hold the move, and then rotate lower. If that happens, and if it happens, perhaps it could even happen before the FOMC, but more likely after the FOMC, to be fair, because typically ahead of FOMC, we don't see sustained price action. But we could see the rotation lower. And in that case, of course, we have to start looking at the 61.8 extension over here, which comes exactly where the lower Bollinger Band is and the previous price action. So this is also a very important clustered support to pay attention to. Okay, that's all on the daily chart. On the 4 hours, what we do see that price has some sort of broken above a flag-like pattern, which typically indicates, suggests a potential continuation. But we've also found resistance at the upper Bollinger Band at 52.67, 52.70 is actually the level that we saw this sort of recoiling happen. And now on this 4 hour chart, if we do see an inside bar candle on the 4 hour, it would be increasing chances of an actual pullback lower down. And we would be looking in this particular case at the 38.2, which would still keep us outside this flag-like pattern, perhaps even the 50 Fibo, which comes at 52.10, and the median line, or even the 61.8, which comes at the previous low, okay, and it would be considered a deep. So the important level here is the 52,300 or so, okay, this territory. As long as the Dow remains above that former resistance area, the breakout remains valid, and the market could continue towards the record high. Okay, now from here, a move above the descending trend line and a sustained hold over 52.30 could take the index to 52.85, and then of course the previous record high, and then the cluster at 53,500, where we could potentially, given of course there is compliance with the FOMC as well, we could see the 53.50 offering a good opportunity to go short. But let's not forget, with FOMC tomorrow, traders should be careful about expecting a straight line move. Okay, if we get an inside candle, as I said before, or any sort of failure, because we are looking at the upper Bollinger Bands now and increased volatility, right? We are receiving a rejection here. Then that may signal an end of day reversal setup, initially targeting the 52K, the EOD, that is end of day, right? So, but let's also have a quick look at what the 1 hour tells us. Okay, the 1 hour doesn't show much apart from increased volatility. There is an expansion of the Bollinger Bands in both sides, which suggests that, you know, this was initially a good move, but it has stopped for now, and we've found a top. We have a peak and hue-like shape in both price and momentum, and now we're having trouble to cross above the previous high. Why that may be the case, where if we look at this as a bearish move rather than bullish, we have actually retested the 61.8 Fibonacci retracement. So this is the golden pullback in a potential dovish, actually bearish market. Okay, so this is our key 1 hour level to pay attention to, which is around 52.65, 52.70, 75. So price is currently testing that golden ratio area. A clean break and hold above it would support a further move towards 53.50, and then potentially you know, record highs. Actually, well, initially the 53.39 or so, 35. But this same level is also an important warning point. If price rejects that level and starts losing momentum, the first support comes in around 52,000, well, 27 or so. Of course, that the trend line will be the first one, and then as you go down, if we do lose the 52K, that would be more significant. So it would invalidate the near-term bullish breakout and expose the lower side of the wider range. So the short-term bias remains constructive, while US 30 stays above 52.30, with 52.64 as the immediate breakout test. So in a bullish scenario, we want to hold above 52.30, reclaim and sustain above 52.64, then look toward 52.95, 53.33, and potentially 53.50. In the bearish scenario, a rejection from 52.64 or 53.33, especially if it comes with an end of day reversal candle ahead of the FOMC, could bring price back to 52.42, 43, then 52.20, and then the 52K, of course. A deeper corrective move then would shift the focus to 51.50, 51.50 actually, yeah. So the Dow is benefiting from sector rotation while technology weakens, but the FOMC and major earnings for Microsoft and Meta can quickly change that balance. So trade safe, avoid chasing resistance, and watch how price behaves around 52.64 and the record high zone, in case, of course, we do move all the way up there ahead or after or during the FOMC tomorrow.